welcome to La Vida Las Vegas podcast. We're two physical therapists living the life in Las Vegas. I'm Dr. Erica.
And I'm Dr. Joe. We created this podcast for two reasons. First, to connect the healthcare, wellness, and fitness communities in Las Vegas. And second, to highlight all the amazing people we've met along the way.
Thank you for listening, and remember to take care of yourself.
Today's guest is Christopher. Andy is a lender in the Las Vegas area. Today we take a look at what a lender does, what to expect when working with a lender, and how you can best prepare yourself for success for the lending process. So welcome to the La Vida Las Vegas podcast. If you'd introduce yourself and let us know what you do.
My name is Andy Christopher, and I am a mortgage consultant and loan originator here in Las Vegas, and I'm also licensed in California, and our company is licensed across the country. So, yeah, happy to be here.
All right, Andy, what is a loan officer? And give us a deep dive into what you do.
Deep dive? We don't have that much time, but loan officer, it's a really, boring and kind of umbrella term for, working in the mortgage field. And the short version, non-deep dive, shallow end dive, is that, I help people get into mortgage loans to buy homes. And, the deeper part of it is the structuring of the loan itself, looking at any individual borrower's income and their employment and, any debts that they bring to the table so that we know that when we approve a loan for them, that they're going to be able to make their new monthly mortgage payment, month in and month out without fail. And so it's not, it took me a while to get into the sphere of it simply because nobody could give me a straight answer on what exactly it means. And so the gist of it is you just look at a borrower's qualifications and you try and get them into a home as quickly as possible, knowing that they're going to be able to afford it.
So going through like a home buying purchase in general, right? People always think about your real estate agent, right? That's the main thing that they do. So like, give us an example, or like how would somebody end up working with you, or how do you like figure out how to start that home buying process?
Yeah. So, for the longest time, there's been this wheel, and it's just, realtors are the ones who, they market, they put themselves out there, and realtors then, there's kind of this magic that happens where, they refer you to like a preferred or referral lender, and it's typically someone that they work with time and time again, just because they know each other's processes. But now, with social media, with so many different avenues to promote yourself and your own business, you have to look at my loan origination activities as my own individual business. Just like you run, White Wong PT, I run my own loan business. And so if I don't have a website, if I'm not on Google, if I don't have social media presence, if I don't have these things, my mentors told me, if you don't exist online today, you don't exist. And so the gist of it is that when you start out, you don't really know what to do. And within, I believe in real estate, and I would, venture to say in loans as well, I know in real estate that within 3 years, I believe, I think it's 82% of people who pass the real estate licensing exam will no longer be in real estate, simply because they don't, there's the delusions of grandeur about how much you can make. But then you get there, and none of the lessons that you learn in loans or in real estate testing prepares you for how to get clients. And so realistically, you just have to, you put yourself out there. You start to meet, real estate agents. You start to meet other lenders and learn how they operate. And, a big tagline is riches are in niches. If you find one specific outlet that is really lucrative, you attack it, because as you start to attack that, like my wife works at University Medical Center and UNLV School of Medicine. So I've always thought, well, what if I just spoke to doctors? What if I tried to do loans for doctors and tried to get in front of that type of clientele only? And, that could potentially be lucrative. Unfortunately, I just haven't done it because, at the onset, there's a spray and pray mentality a little bit where you just want to get in touch with anyone you can. So with the time of COVID-19, it's been a lot tougher to just go and network and go meet people. And I remember Joe and I went to a networking session at, what was that Mexican place we went to?
Oh, I can't remember the name of it. Yeah, that's right.
Yeah. It was over east of here, and I can't remember the name of it right now. But you just meet people and you just see what they do. And my excuse me, my industry mentor is just like, you have to think of yourself as a professional friend at this point. People should know what I do, but in just kind of a normal way. And then when the time comes that they need your services, like when a friend needs you, you need to be the first one that they think about. So I've done a combination of, social media kind of ads, putting ads out there to try and just garner some interest for people who are looking at buying a home. A lot of word of mouth, a lot of posting on social media, just so that at least my immediate sphere is aware of what it is that I do. And then with my company, Element Mortgage, they do provide certain lead opportunities. That's actually only in California, though. So Nevada is still my territory only. But it's just, I feel like it's pretty similar to when you're trying to go out there and get clients for, for who you can train and who you can strengthen. It's, you have to get out there by word of mouth, and then you just slowly kind of build outward. You grab a client here and there because there's a need, and then you just kind of piggyback off of that success. But it's tough sometimes. It's really, really tough.
So for your profession, is there some kind of a state license, or like how do you get credentialed, and what's the process on that? And like, how do you know where you can work?
Yeah, state licensing. So you go through, I think it's for loans. I'm getting a little bit blurred between a couple of licenses, but for loans, there's an hour requirement in terms of preliminary training. I believe it's a 90-hour course, something along those lines. Might be more, might be less. And then you have to pass your state exam. You have to pass the national exam. And I passed it doesn't like say it on your licensing, but I passed the national exam with flying colors. But then I got the exact score that you need to pass on the state score the first time. So that's right when we moved out here to Nevada, and it was something you just have to go through. Everyone talks about in the industry. You just got to get your license, and then you have those things that you've learned, but they don't teach you how to generate business. So then you have to go out there and see what's going to work for you in terms of actually getting people to, use you for your services. And the toughest part about today is that, there's so many people who are just kind of shopping, and there's no allegiance, there's no loyalty. And you have to prove yourself in a very, very short amount of time. So, a lot of trial and error, mostly error up until this point for me. And, but yeah, the state licensing, it's pretty straightforward. It's not a crazy high passing rate just because people think it's going to be a lot easier. So there's a lot of repeat, people who take it 2-3 times, but I was lucky.
Oh, that's good. So what did bring you to Nevada?
So Julia, my beautiful wife, she is a pulmonary critical care physician at UNLV School of Medicine. So she works out of UMC. She works out of the VA here. And it was an opportunity for her that we simply couldn't pass up for her fellowship program. And with that, she's originally from Kansas. She actually came out to California when, our relationship was building. And I was working at University of California, Irvine in the field of intramural sports. That's what I got my master's degree in. That was always the plan for me, was to maybe run the ARC one day up at Davis, or do something within the field of campus rec. But then conversations and things kind of pivoted, and I realized that, if I wanted to maybe experience some more financial freedom for our family, if I wanted to provide on a different level, that a new field and kind of a change of scenery could be great. So, a lot of people are coming to Nevada from California for the same reasons, lower taxes, but for us, it was a combination of things, and a good place to try and start a family. So it was either that or kind of, West Hollywood area, which is, you can't any income that comes in immediately goes into your rent or your home payment. So it was a pretty easy choice, but at the end of the day, but closer to California and a really good focal point for, McCarran. You have a lot of international flights and you have a lot of things as that being a hub. So just kind of happened. We just went with it.
How do you like to spend your time in Vegas besides working and being a dad?
So, well, right now it's just being a dad, but before COVID and before even we moved out here, we would come out here a lot, and I'm not saying it in like a degenerate way, but we would come out here pretty frequently to just enjoy the Strip and enjoy what Vegas had to offer. So it was always on our radar as a fun place. And so what I do here, pre all this stuff, we learned that there's so much outside of the Strip, especially we're about 20 minutes or 15, 20 minutes west of it right now. And the biggest draw, the biggest thing that we noticed was a huge difference was all the attractions outside in terms of what nature has to offer, all the hiking trails, all the bouldering trails. You got Lake Mead. You have all these fun things that we barely got to tap into before we kind of got shut down due to quarantine. And, we did one of these really, really fun hikes. I think it's called Gold Strike. I think it's about 40 minutes away. And it was so much fun and so taxing. You see a bunch of photos when you get to the bottom of this basin where everyone's taking the celebratory, hey, we got here photo. And, it's the kind of the IG, the Instagram spot. And so we thought it was a pretty easy bouldering hike. And we're halfway through it and this is effing tough. Like, what are we doing here? And we weren't supremely prepared from a fitness standpoint, but we got there. We did our thing. We brought our little snacks, and I remember at the bottom, actually, Julia fell down and like cut her knee, and we were just like, damn it, of course. At the very end, like before we turn around, something like that happens. But, we love to sample all that stuff. We like to try there's so many food places. I'm sure you two have seen that as well. We love Mexican food, so we try any recommendation. We love Thai food, so we try any recommendation there. Other than that, it's just been so work focused that it's hard to really take advantage of everything. But then when someone new comes into town, they just kind of reinvigorate you about, hey, let's go see this. I want to go check out the Neon Museum. I want to go check this thing out. Some site that you take for granted because you're situated here. Like, oh, there's plenty of time to go see that. And now we've been here for a year and a half, and we've barely scratched the surface.
I feel the same way. I feel like there's a lot of local things that we haven't done yet. Some things that we have and some things that we haven't, as far as all the museums and everything that's out here. I mean, you lived in San Francisco and everyone went to Alcatraz, right?
Until he visited.
What?
Yeah.
I went to Alcatraz when I was 9 or something like that. But yeah, you take it for granted. I'm sure you did the same exact thing in San Francisco.
Oh yeah, definitely. We don't go there because it's so busy. That's like usually what we would have a conversation with a family. Oh, avoid that because all the tourists are there. Like it's probably the same thing here. It's like you avoid it because it's so busy, it's so trafficky. We get really used to not having to go through traffic in Vegas. It's just if you have to go somewhere 20 minutes, for some people that's like, oh, it's too far.
That's a trek.
Like you live in Henderson, that's far.
Yeah, I guess we can't be friends.
Yeah.
When I was doing real estate activities, I sometimes refused to go to Henderson because I'm like, nope, that is just another planet from where I am right now. You don't get it. And when we were living in Long Beach before we got here, and my commute every day to Irvine was an hour there and at least an hour back. And now 25 minutes away feels like the end of the earth. It's crazy how things change.
I'm not sure why that changes so much. I mean, I came from the Atlanta area and traffic's terrible there. And the same thing. And now I'm here. I'm like, I'll go to this other grocery store. It's a little bit closer to my house.
The biggest thing I remember about Atlanta, because it's the only time I've really been there, is the airport just being a nightmare. Is that true?
Mm-hmm.
It's pretty busy, yeah. Definitely get a TSA pre-check if you're going to be going there.
Yes.
Because you never know how long the security line there will take.
Yes. Highly recommend that. And I'd recommend using the shuttles because the first time I went to the Atlanta Hartsfield Airport, I walked from the end
Oh,
gate,
no.
which is probably about at least a 20, 30-minute walk. So it's probably a mile plus. And I walked with my suitcase, and I was like, "Hey, where's the ground transportation?" You're like, "Keep walking." I was like, "I have been. Like, how far is it?"
Yeah, it's all kind of perspective, and LAX was a nightmare as well. They've kind of tightened things up over the past couple years, but I remember when I was living in Iowa, I would have friends visit from LAX, and they would land in Cedar Rapids, which was just about 30 minutes north of Iowa City. And they were like, "Yeah, like, am I going to be able to find you pretty easily? Do I need to take a shuttle anywhere?" There's literally there's just 3 airlines or so that run out of there, and it's just one, maybe, I don't know, 1,000 feet or maybe 2,000 feet of just where you get dropped off and picked up. There's nobody ever there. It's just Cedar Rapids. You're just kind of there. I'm like, "No, I think I'm gonna be able to find you pretty easily." And I try to build it up like, "Yeah, you're gonna want to do this and this and this," and then they get there and like, I hate you. It was just, you walk in and you're outside.
Were they? So did you ever pick anybody up in the wintertime?
Yeah. Winters there were like nothing I ever experienced. Brutal. Just, you're walking to class and it was sub-zero, I don't know, -15 at times, and there's a little brisk breeze in your face. I thought I knew what cold was until I lived in Iowa City for a couple of years. Summers are worse, though. Summers are unbelievably humid and muggy, and I have a, doughy body that just soaks in all the humidity. And so when you can't get away from it. I'm just sweating profusely. And it was, I was prepared for the cold. I was not prepared for the summer heat and how to handle it and how to navigate it. It's just inescapable.
So one time we went to Flint Airport, and Erica got to experience that when it was pretty cold. And it's the same thing. Like, we were the only 2 people outside. Mm-hmm. And then that was a good experience, right?
I wouldn't say that I have ever been prepared for cold weather, ever. And, if you like your experience, my experience growing up in California is generally mild, very mild temperatures in general. And then you go to Tahoe, and that's your experience with the snow. So I'm like, oh yeah, I'm gonna wear this like snowboarding jacket.
Be a piece of cake.
Yeah, like I've been in the snow before.
Layers? Why do I need layers? No, you just you wear what you're gonna wear when you need to take it off when you get into somewhere warm.
Exactly. That's not the case. So
Not
a snowboarding
close.
jacket is meant for activity.
Yeah.
When you're snowboarding, and then you can have your one layer, maybe a couple layers or something, and it's meant for like being able to be breathable and like you can let air out. That did not prepare me for standing outside in Flint, Michigan.
You could feel the wind like pick up. Like, as the wind got stronger, I could hear feet like tapping faster to try and stay warm. It was like a direct as soon as it picked up.
My kind of graduation ceremony was it was late November or early December, and I was driving to class, and I was driving to work, I can't remember. And there was this very gradual uphill, and it was, it'd been snowing out. I had a Jetta at that point, and very, very mild uphill. And I had a stick shift, and I turned the corner, and like I loop up, and I'm driving up, and I just start to feel my tires just like spin and spin and spin. I'm like, I'm gonna go backwards at some point. I don't know what to do here, and so I'm just trying to. I don't know what to do. I've never driven in these kind of conditions, except maybe up to Tahoe or something like that. And my wheels are spinning. I'm just barely 1 mile an hour moving forwards at this point. Everyone's passing me on the left. You got people who see my California license plate, and they're just like making CA signs in the window as they pass me by. Everyone's honking at me and laughing at me the entire time. And I'm like, yep, I deserve all of this. This is me not being prepared. It was barely a hill. I didn't need chains for it, but I don't know what I did. I took it too slow.
How did you were you able to get to the destination?
Yep, barely got there. I think I was late by 10 minutes or something, but I got up the hill. Nobody had to get out and help me. I don't think anybody would have gotten out and helped me out of just pure, you got yourself into this. So that was a wake up call in terms of maybe I should just take the bus to work every day. Don't put myself through this agony.
Is that what you did?
Yeah.
So, as far as for the lender, I don't know if a lot of people really understand what they do or that whole process. Because as far as my knowledge, I don't know if I knew what a lender was even 4 or 5 years ago. Like that's still a new thing for me because everyone knows what a realtor is, and that's the person that helps you find a house. But what's the process then? So if someone like once they find a lender, like what are you doing to try and get them set up and approved for their home?
Absolutely. So what I can tell you it's not is you do not just click a button and get a mortgage. As you know now more than most, there are lots of steps and there's lots of process, and that's why you need someone who you can trust and get on the phone if you have questions or if things are popping up. But the gist of it is that you start off with a mortgage application. So it's called a 1003. The abbreviation is the YIRLA, and you fill out basic information about yourself. You fill out information about your employment, about where you've lived the past couple of years. You start with a foundation, and then what you need to do is submit documentation that verifies everything that you've just stated. Because if I just submit an application and I go into an app on my phone and I say, oh yeah, I make $10,000 a month, I do this, I do that, there's no grounds for proving it, and that's what these grounds are, right? You have to show it in the detail, in the weeds, so to speak, in terms of I say that I make this much money and I have to prove it. So as we go through and we prove and say, okay, Joe makes $5,000 a month, right? We then, go in and look at your credit. We pull a credit check and we say, hey, what are Joe's liabilities and where does his credit score stand? There's a huge fallacy that your credit score is the only thing that is keeping you from getting a home. And I can tell you that is absolutely not true. By far, the bigger obstacle is having enough money for a down payment. There are so many people that believe I have to have 20% to put down towards my home that it just keeps them away. Well, last year, the average amount on a down payment was 7%. So there are programs for everyone. You just have to know, if I'm only bringing X amount, if I'm only bringing 5%, what does that mean for my monthly mortgage payment? So when we go in, we pull your credit and we look at your liabilities. We factor in those monthly liabilities, and then we bring in the proposed monthly mortgage payments. And when we look at what's called your debt to income ratio, this is basically how you get into a loan, whether you're approved or not. How much money you make per month. You cannot cross over a certain percentage based off of your monthly liabilities owed, plus factoring in the new proposed monthly mortgage payment. So if you make $5,000 a month for all operating and just kind of broad strokes purposes, you cannot, when you bring in your monthly mortgage payment, you cannot be spending more than $2,500 per month. So you got to keep it under about 50% debt to your income that you're pulling in. And when we then go through and factor in all those things, and you're in the process of buying the home, that's what called getting pre-approved is. You are then issued a letter of pre-approval that says, at this purchase price, we believe that your debt to income ratio is manageable enough that you can afford the monthly payment plus your other debt obligations. And now you can go shopping for a home at this purchase price. And we are saying that this letter is our promise to you that we're gonna find a loan product for you. So, with so many marketing gimmicks and so many things out there, the process has been made to seem very simple. I can tell you it's not, but our job in the industry is to make it simple, is to kind of break things down and say, here are the factors that really affect you as the borrower, as the home purchaser. Here's all you care about. People don't care about jargon and jargon and jargon and jargon, right? When you're doing a preliminary consult with, a PT patient, they don't want to hear jargon and jargon. They want to hear, how are you going to make me healthy? How am I going to be better? How long is that going to take? right? It's the same kind of thing with us. How much can I afford? How much is this going to cost me at the end when all is said and done? And how fast can you make this happen for me? So you try to break those down for people, but you have people who have a much better understanding of the process. That's the ground floor. Then you have people who invest in properties and they do this, multiple times in a year. And they just want speed. They want to know, how quickly can we get this done? How quickly can I move on to the next one, right? So it's far more nuanced than I ever anticipated, but at its foundation, it's about making the complex very simple and showing people that you can afford this much, and then getting them in the hands of a realtor. Because when you have an amount, when let's say, so here in the Vegas area, the median home price over the last few months, it just keeps setting new records in terms of what the price is people are willing to pay for homes. I believe we're at least at $340,000 now, whereas pre 2020 it was below 300, and the reason for that being is because inventory is so low. It's not just that people are selling it for more, it's just there are fewer homes out there, so there's more competition for them. But when you get someone that letter that says you can afford this, the sexy part of the transaction is always going to be shopping for the home. I like to, there are a lot of analogies about, realtors and lenders, real estate and mortgages and things like that. And that is 100% the flash, the appeal of shopping for the home is actually getting to shop for the home, right? But what's happening is, with so much brilliant marketing through Zillow, Realtor.com, Trulia, places like that, they get people sold on homes to start conversations before people know what they're approved to buy. So in a way, they almost set unrealistic expectations about, hey, my monthly mortgage payment is only going to be this much because Zillow said so. Then you get into the weeds of what they can actually afford. And they're like, whoa, wait. Zillow said I can afford this. Zillow's become almost like Facebook. It's its own verb. Zillow it, people look to Zillow as the authority just because they've earned the right through marketing and through production, and they have a lot of different, very clever channels to, get hooked into you. And they, the realistic timeline needs to be lender then realtor, but many people reverse engineer. They start with the realtor, then they try to scramble and get pre-approved for a loan. When they find a place that they love, then they're ultimately let down if they can't afford it. So I come from a really honest and just kind of true and visceral place about the transaction, and I try to tell people as it is, and some people don't want to hear it. They tell me to F off. I don't know if I can curse on this podcast or what. But they tell me to go screw myself. Like, I know I can do this better or do this faster, or I don't need you or whatever. You're not telling me what I want to hear. And that will never be my style. I'm always just going to tell it at face value and try not to over-explain. I want to keep it simple, but I want to tell people what they're up against.
It's kind of funny when people always feel like they know your profession better than you do.
Right?
Kind of thing.
Does that sound familiar at all? Or?
I feel like someone else has maybe told me that before at some point. I don't know. Maybe. Maybe. I feel like a lot of people run into that too. Like, people go to doctors now or MDs and then they're like, oh, I need this medicine. I'm like, how did you know the name of that?
Right.
And so it's, well, they Googled it. So
I know my body better than you.
Right.
Well, why are you here? I feel like you don't know.
Yeah. I guess the same thing. Like, Zillow didn't give you that loan that they said you're approved for?
Go figure, right?
Yeah, that's weird.
We like to joke that the A in Zillow stands for accuracy. So
See.
So what would be your recommendation for people who are, starting that process of thinking about buying a home? What should people have ready, and what things should they prepare for in order to start working with you and or a realtor?
It's a very personal question. That's like a third date kind of question. But just be prepared to show the documents that you probably only use during tax time. You're looking at tax returns. You're looking at W-2 statements. You're looking at even something so simple as your most recent pay stubs. People take this information, and if they get it in paper form, they throw it away. If they get it digitally, they don't know how to access it. So I think you just need to be in tune with your own access to that type of documentation. Second thing it would be make sure you have some money set aside. Another wonderful marketing, to start the conversation is no money down, right? Well, do you think just because you smile at people that someone's just going to give you free money to buy a home? No, you're going to pay for it at some point in some way. Even if it means no money down means it's all financed into your loan amount, right? So that is just another conversation starter to get people hooked in, but you have to have some money set aside. And especially somewhere here like Las Vegas, where, a lot of people work on tips, work on commission, start putting anything that is extra aside. Put it in an account that is tangible, and you can do what's called sourcing throughout the course of the process. If you just say, oh yeah, I make 10 grand a month, and I've got about $50,000 cash ready to go. Is that cash just in under your mattress? Is it behind the toilet? What is it sitting somewhere? I don't know. And people are kind of intentionally vague about where their money is because as everyone should be, they're hyper prone to being ripped off during this time. And so in preparing for having that down payment set aside, my other big recommendation is don't just go with the first person that you hear from, or don't just go with the friend of a friend because, or someone that the family recommended simply because they're quote unquote in the industry. You need people who are smart and can navigate tough issues. You don't need people who are fiending for that next commission check, because people get very wealthy doing, just doing transaction after transaction after transaction. And so you need someone in your corner, we say in the industry, that like, and trust. The trust to me is it has to be a two-way street. And I mean, if you can't get your loan officer or your realtor on the phone when you need them, what are they really doing for you? You need someone that you can count on. So, my sub point, my bonus point would be that it just takes a little bit longer than you expect. Unless you are familiar with the process and dialed in and ready to go, it takes a couple months, All
right, so we're going to take a quick break, and then we'll be right back. Before the break, you were talking about how you're helping people fill out that form that they have to have. So are you just filling out the form, or you're part of the bank, or what is the actual role that you're fulfilling for that?
Yeah, so in the mortgage field, there are brokers, there are retail lenders, there are the actual bank. If you walk into a Wells Fargo, it's not like walking into, Joe Smith lending agency here locally, right? Everyone's going to have a little different way of how they operate and how they're able to conduct their business. So for myself, with Element and through American Pacific Mortgage, which is the, I guess the parent company, you would call it, as the loan originator, in taking that form, I'm entrusted with sensitive information. I am the one dissecting the information to see, is this person qualified? Can we, how much can we approve this person up to? And then when we are approved and we enter into contract, or, we're working towards a refinance, I'm the one who's collecting the documentation. I'm then submitting that to our processing team. And then our goal is to get the loan into what's called underwriting. Underwriting is a process that is kind of two different paths towards the same end goal. So underwriting is happening. They're the ones who are checking boxes, and they have the black and white, this is good, this is bad. And in underwriting, that's where they go through all the documentation that you're showing, but they're the ones that really get into the meat and potatoes of what that documentation is showing about you. And if there are any concerns, if there's anything that is a red flag, they're the ones who are going to catch it. So then once they approve the loan, they do what's called, they approve it with conditions to be satisfied. So that then pops back to me, and they say, hey, your loan is approved, but we need to see this supplemental documentation before we can get it kind of clear to close, finally approved to, close and fund. So I'm working with our processing team. I'm working in conjunction with the underwriters. My goal is to submit as clean of a file as I possibly can so that when those conditions come back, they're minimal or non-existent. Okay. And during that time, we're navigating things between different companies in a purchase contract. There's the title and escrow company, which we were also talking about during the break. There's the listing agent. There's the buyer's agent. There's a bunch of different contingency timelines going on within the actual real estate purchase contract that we're all working towards. And I mean, the whole end game is to take care of the client, make sure that the home sells. And when the home sells and the loan, when the loan funds and the home is closed and recorded with the county recorder, that's when the agents in the transaction, that's when all of us get paid in essence. So there's no like upfront fees that people are paying or any upfront cost to use our services. We all want the same end game. We all want that person in front of us or that family in front of us to get into their home, and start their life, because that's how we make our living and that's how we make a difference in the community.
And then as far as common issues that people might run into when they're applying for a loan, what are things you normally would see?
So we talked about down payment, being an obstacle towards purchasing a home, but you do see people who run into, mismanagement of their credit and of their liabilities up until that point. You get a lot of credit challenged people who simply don't have a qualifying score or a threshold of qualification. But you even have to take that with shades of gray. The first company I worked for, there was people think that, if I have X credit score and it's so low, I can't do anything with it. Well, there are different lending channels and different brokers and people who go lower than some people because that's their thing. That's how they stay competitive. But they're taking on more risk because those people are traditionally not great with their money because they don't have great credit, right? So people who are credit challenged, they typically run into some issues. Another big thing you see on refinances or in purchases is you have an approved loan, everything's going smoothly, and they show up to some type of walkthrough or something in the middle of the transaction, and they show up in a brand new like Land Rover. And you're like, where did that car come from?
So don't do that, is what you're saying.
This would fall under the category of do not do. Do not make any large purchases while you are in the process of purchasing a home, because that then comes into the fold of what we were talking about earlier, your debt to income ratio. Well, how much are you paying per month on that card right now? Oh, it's only $1,000. Oh, well, shit. We now have to factor that in, and, we're kind of screwed here. So it's one of those things where education is pivotal, and buying a home involves more sacrifice than you understand. You just have to keep it under wraps and keep it under control with your spending until the job is done. What we've seen in 2020, and this is more prevalent now, but it happens, is people lose their jobs or people get reduction in hours. So when you start at a starting point of 40 hours per week and you're counting on that income to come in consistently week in and week out, and then 15 days into the transaction your hours get cut to 30. Well, what happens to your income? It has to get cut as well. So you have to factor in, is that going to get them out of an approved loan status? Is there any way that you still have extra income coming in? Do you have any type of award letters such as Social Security coming in? Is there anywhere we can supplement this income? Because all lenders and banks, all they care about when they get you into a mortgage is, are we going to get our money back plus interest? Come hell or high water, every single month, are you going to be able to make this monthly mortgage payment? And if there's a red flag or a shadow of a doubt that you will not be able to, you're going to either need to show more proof as to how you will be able to make that payment, which is just in more income, or they just are going to say sayonara.
So what if someone has a bad month, or like you said, now people's hours are getting reduced, and they have an uncle that's like, hey, I can just give you another $15,000 for your account. Will that work?
So it's a novel thought, and a lot of people, I've dealt with a lot of people like this, where their hours are getting cut, and they're like, oh, don't worry, we just transferred $20,000 extra dollars into our checking account. We're going to be able to cover everything. Well, that is kind of the kiss of death, because you then have to prove where that money came from. You then have to prove, how did you get this money? Are you going to be getting it consistently until the end of time, until the end of your mortgage? And so it causes more red flags, because, it brings into the picture, did they obtain this through unsavory methods? Did they obtain this through something called a hard money loan, which is just like, hey, give me $5,000, and like, I need this $5,000 in order to make this purchase. And they're now paying off another loan outside of this loan that they're trying to get into. It starts to get very, very complex and convoluted. And here in Vegas, you have a lot of people, like we mentioned, they're working on tips, they're working on commissions, and sometimes their income is difficult to prove, because their tax returns show, one thing that paints one story, but then they're telling you and they're showing you, yeah, I'm pulling in all this money per year. Why am I struggling to get into a loan? It's like, well, this is what we can prove, and this is just not verifiable. So if you all of a sudden have 15, 20 grand show up when you've had your hours cut, or you've been, you've been put on temporary leave, anything that happens within your employment, that's going to directly affect your ability to get into a loan program.
What would be a strategy for someone who is in that situation where they have cash available in some senses, but the income proves differently? Like, what would you recommend to somebody to help them kind of in that process in the future?
Yeah, that's a great question there, and we get this a lot. You would need to just kind of temper your expectations in terms of how quickly this is going to be able to happen for you. So, if you have that cash on hand, you want to get it into an account as quickly as you possibly can. So let's say you have 50 grand sitting around, whatever, right? Get that into an account. Have that be able to be sourced as money that can be used in your upcoming transaction. So, there are people who will say, 2 months. There's all kinds of shades. It's going to be dependent upon the transaction itself. I would say at least 45 days. You want that money sitting in there so that you can show that it's sitting there and able to be used for this transaction, right? The second thing is just having foresight and having a little bit of proactivity. You have a family, and let's say you're working in a casino here, and that in the next 2 years you want to buy a home, right? What can I start setting aside? But now, have there been things that I'm traditionally, claiming on my taxes, or that I'm using as a write-off possibility, that I now need to prove on my taxes, as this is the income that I can prove on my taxes, as opposed to writing everything off so you don't show, so you don't owe any taxes, so you don't, show any income on your taxes, so that you don't have to pay taxes, right? So you might have to start proving more income in the, in the due diligence, in the actual paperwork, if your goal is to purchase in 2 years, so that we go back and look at 2 years tax returns, and instead of only showing $15,000 per year, it's now showing $40,000 per year. That's a massive difference in terms of, if you're just pulling in a lot of tips and commissions and stuff. If you can have that, any commission and tip money kind of set aside and in a separate account, and then merge that and coincide that with more provable and verifiable income, that's a slam dunk. I mean, without using any names, I mean, a person who shows me the last 2 years that they're working 40 hours every week, and they're pulling in $40,000 every single year, and that money's coming in without fail, is far more qualified of a person to lend to than someone who has $1 million in the bank, is self-employed, and writes everything off on their taxes and does not show any income, right? So all this cash on hand, and if they want to buy a home, absolutely, they have no use for me. Go buy your home and, enjoy your life, right? But with interest rates having been at historic lows, everyone is finding it's just like, it's stupid not to at least start the conversation of financing, because money is cheap. The goal is to incite more purchasing, so money is affordable right now in terms of the mortgage market. So all these people who have cash assets on hand, but they don't show anything on their tax returns because they're self-employed or they own their own business, whatever, that situation is, they're not as qualified as that person who just goes to their job 40 hours a week, makes their 40K, pays their taxes, shows all their income on their taxes. It's a crazy, crazy environment.
Remember Dave Ramsey saying something like that? He's like, I don't have enough credit to rent an apartment, but I could buy the whole complex.
It's crazy how true that is. And navigating those conversations with highly lucrative, powerful people who can't get into a mortgage loan is difficult. I'll say it that way.
I bet. So what's something that you commonly see in your practice that you wish more people knew?
That's a really good one. I alluded to this before, but I kind of wanted to elaborate. So credit score is not everything. Everyone thinks, well, my credit score is 580, I can't get a mortgage loan. That could not be farther from the truth, because not only could your score currently be qualifying, but there are also ways and methods to improve your score faster, and we can help navigate those discussions. The flip side to that is sometimes when you think you're doing something that's for a beneficial purpose, it oftentimes in a loan transaction can hurt you. And when I say that, if let's say we needed to bump your credit score up 10 points for you to either qualify for a certain program or get approved for better terms and pricing for a specific program. And we tell you, we need you to pay this credit card down to this amount to the dollar. Let's say you owe $1,000 on a credit card, and I tell you, pay it down to $208. And, we're operating under that assumption that you're going to pay it down to $208. And a month later, 5 days later, whatever it is, right? You're like, hey, I paid off that credit card. We're good to go. Paying off that credit card can actually harm your score more than putting it at that exact number. I don't know hardly anything about credit, and there are 3 big credit bureaus that do the reporting to obtain what's called your mid-FICO score. Experian, Equifax, TransUnion. They all operate, and then when those 3 scores are pulled, your middle score is what qualifies you or, for certain terms and pricing and things like that. And sometimes people disqualify themselves because they think if I pay off my credit card, it's going to help me more. But that is not any incentive for the credit card companies. They want you to have revolving debt. So they actually reward you more for having a certain threshold of revolving debt, as long as it's under about 25%, 30%, for all operating purposes. Keep it at around that number of whatever that card's available, capacity is. They want you to have that, and that will build up your score faster than having a zero balance. So you come in thinking you've done this noble and great thing. Yes, I just paid off this credit card. That's 20% APR that I no longer have to worry about. This is tremendous. Hey, Joe, I'm sorry, but you're actually worse approved for this loan than when we started, and we have more work to do now.
So then they have to go make a purchase for $208 in the car.
So then you purchase for $208. Then you have to prove why you bought that thing, and it just becomes this whole mess. And the other thing is that as you're going through the transaction, we talked about not making big purchases. It's just listen to what's being told to you. If I say that this will be taken care of at closing, but you're getting this itch, I have to pay this off. You just kind of have to trust the process to a certain extent, and that's why you have to trust the person that is working in your corner. Before 2008, 2009, the mortgage industry was just based off of predatory lending, and people made fortunes doing what I do because they were lending unscrupulously, like without abandon. They were just getting people into mortgages because they were getting paid. And then that's what led to the housing mortgage just fallout, in 2008, 2009, 2010, because all these loans and all these things that were securing and the homes used to secure, the loan, it was all just basically one big fallacious situation where these people couldn't afford these homes. There was no debt to income. People were just, oh yeah, you want to get into the home, here's how you get into this loan, here's what you do. And I'm still learning a lot about what used to happen, but I like to think that I want to know just enough to be able to explain, but I don't want to develop bad habits. I mean, I've kind of come into this thing fresh post 2010, and I've been able to just not develop those bad habits simply because I don't know any different. So it's it's just crazy what it was and what it is now. But the other big thing that came up with COVID is everyone was saying, everyone's kind of waiting for a deal. I want to buy my home at a discount because everyone's going to be losing their homes, right? People are going to be dropping their mortgages. Well, that's what all these regulations and actually all the stuff that you were tested on, when we talked about licensing, that's why all those things were put into place, was to prevent and kind of have safeguards put in place in the case of something like right now happening. They know that, it's not just going to be this massive foreclosure and fire sale of people getting rid of their homes. People who have gotten into their mortgages, whether it was comfortably or by the skin of their teeth, they're expected to be making their mortgage payments. And even if their employment suffers, there are kind of safeguards that have been happening, such as deferment and forbearance, and they're actively trying to keep these people in their homes. So anyone who's been waiting for a quote unquote deal to come about is going to be waiting for a pretty long time. You're going to see blips and spikes just like any other industry, but it's, you're not going to see this just mass flood of $100,000 homes if that's what you're hoping for.
And something you mentioned earlier too, that people think they have to put 20% down for a home, but you said the average last year was 7%. Does that change anything as far as like what you have to pay, or wasn't there some kind of insurance that you have to get?
Absolutely. So, basically what the 20% threshold is saying that the more equity you put in your home at the onset, the more trustworthy you are as a borrower. If you give me $100,000 for a $500,000 home, I trust you more than someone who gives me, I don't even know what 3% of 500,000 is. That's math. It's at maybe 15,000. I don't know, whatever. Basically, you have more equity and you have more skin in the game, right? So 20% has become the threshold. If you pay 20% or more down payment, you're basically less of a risk to a lending institution. 20% or less, and you hit the nail on the head. You factor in monthly mortgage insurance based off of the type of loan that you go with, whether it's conventional financing or some type of government financing. Mortgage insurance differs. It also differs based off of your creditworthiness. Someone who is doing conventional financing and has a barely qualifying credit score is going to have a different mortgage insurance factorial than someone with an 800 credit score and, might be bringing a few more percentage points down. But what this does is this lowers the barrier for entry, and it allows people who have minimal down payment funds to get into homes. So the whole goal is to say, as long as you can make your monthly mortgage payment, we're believing in you, the person, only bringing $9,000 or $10,000 for your down payment on a $300,000 home. But you're going to have to pay for it, and we're going to have to insure ourselves because you're a little bit riskier at this point. So mortgage insurance, you can bring as low as about a 3% down payment on any given transaction, depending on the loan type. Your veteran, your VA loans, and your USDA loans, those are the ones that are going to be 0% down, but that amount is going to be financed into your loan. So there's basically a fee that you pay in order to obtain that. And there's also shades of gray there. There are types of VA programs where they don't charge what's called that funding fee. And I could sit here and bore your guys' ears off about this stuff in terms of how many millions of derivations and ways there are to get into a loan. But people are just afraid to start because it seems insurmountable. You just kind of have to, just like your career choice, just like anything creative that you're trying to, do for yourself. You just kind of have to dive in, even this podcast for you all. You have to dive in and see what happens and then learn and adjust. But there's so much information out there and there's so much misinformation. I just try to educate the right way and just tell people the way it is. But yeah, that mortgage insurance, that does factor in, and then that goes all back into your debt to income ratio and all that fun stuff we've been touching on.
Nice.
So if you are thinking about buying a home, ask Andy, because he'll answer and he'll get stuff done for you. So then you can essentially go through it's everybody's unique situation, right? You can't just be like, oh, this is going to be right for everybody. And it sounds like that's it's very personalized, and it's really dependent on your situation.
Love questions. Questions keep us sharp, and it helps us learn things that we might not know. And even if you have two identical borrowers on paper, they're going to be 280-degree different transactions. I guarantee it. There's a best practices, and that's what we implement. But at the end of the day, based off of that given day of the week, something could, throw a wrench in the gears. Something could present itself on, in underwriting, or something could present itself on the title of your home that, we didn't know that this thing even existed. And now we have to navigate this particular thing with the title company. And there's just so many different things that could happen. So I like to say that it's an imperfect pursuit of perfection.
Love it. What's something you've learned that you wish you knew sooner?
Oh, God. So the wonderful thing about pivoting industries is how much internal reflecting you're tasked with doing. You either choose to do it or you get overwhelmed and you go do something else with your career. But one of the biggest lessons I've learned, that is I wake up to this on my phone every single day, is that success becomes inevitable with consistency and repetition. But in order to attain that, in order to be consistent and be able to repeat a task over and over and over again, you have to take action. Analysis paralysis has always been an Achilles heel of mine. I look back at, all the times I failed to act on an opportunity or, a choice or something that presented itself simply because I talked myself out of it before even starting. And it's just like, if I could go back to being 16 and be great at one thing, I like to joke. I joke with my family. I joke with my friends. My tombstone's going to read, Andy Christopher, good at everything, great at nothing. And, loans and mortgages, this is my call to action. I'm going to be great at this thing, because you just have to give it a chance to breathe and keep doing the same things day in and day out to be successful. And so the thing that I would tell 16-year-old Andy is, find something that you love, take action on it now. Don't be overwhelmed if you fail, and just do the things that other people are telling you to do who are already successful in that thing, and just keep doing them. Literally just keep doing them, because if you want to be stronger, you're not going to just go read a book on doing push-ups. It can help with form and it can be a helpful supplement, but that's not going to make me stronger, right? Failing to take action means you're just kind of cheating yourself at when you're going to be successful. And so, I try not to dwell too much on going, I'm not going to sit here and say, I'm going to work on inventing a time machine so I can go back and tell myself that. But if I believe time travel was possible, and that was my one thing I wanted to be great at, then just go for it. Go for it until you've hit your breaking point. And when you've hit that breaking point, just keep going for it. Keep doing it if that is what you believe in. I think it comes down to your internal belief more so than, anything else out there. But it's just, success is not easy. It's earned. Keep doing the same things over and over and over again. That is your path to success. And don't let anyone tell you different. Just take action on it and just keep acting on it every single day.
Very good. And how can people find you?
Well, got a few social media accounts. I've got a fun moniker, All in Andy. So All in Andy Vegas. You can find me on Instagram. You can find me on Facebook. All in Andy Homes is my website, and you can check that out as well. And you can just shoot me a text or an email. I mean, you can go lo-fi on it, but I'm accessible, like we said, with the kiddo. I'm by some type of mode of communication pretty frequently. So it's just if you want to go really old school, let's just go find a happy hour. Let's go find a $3 beer somewhere.
Love it. And we really appreciate your help. I guess full disclosure, you helped us with our loan. You did an excellent job. You made that process as painless as it could possibly be. But you really helped us walk through it, and you're very honest and upfront about everything. We really appreciate that.
That means more to me than you could possibly know. And I can't tell you how much I really appreciate those words. So thank you so much.
Absolutely. It's an honor to have you on the show. Thank you.
Thank you.
Thanks, Andy.
We'd like to thank you for listening to La Vida Las Vegas podcast. We hope you enjoyed the time with our guests as much as we did. It would help us out so much if you could share, subscribe, or review our podcast, or any combination of the three. Thanks again, and remember to take care of yourself.